What is up, everybody? Today I will be showing you guys a proper tutorial on how to read great market structure, the overall market structure, and the fractal market structure. Let's get into it. How do we read market structure? Let's get into it. First of all, we need to know how the market moves. In bullish, we have higher highs and higher lows, and we're going bearish, we have lower lows and lower highs. That's the first step. We have a higher high, and we have a higher low. Right? This as well, and this as well. So, first of all, you gotta know the basic fundamentals. If we have a high that gets broken by a candle close, so creating a new higher high, that is called a break of structure. Because it breaks the overall structure of the market when we close above it. We don't want to see a wick, we need to see a proper close. So when we get a break of structure, this will then become our protective low. This is where people place their stop losses, right? So this is a break of structure as well. There we go. And then this would be our protected low. But if we look at it on the bearish trend, we can see that we are not creating higher highs, higher lows, but we are creating a lower high. If we look at it on the bearish trend, we are not creating higher highs, higher lows. We are creating lower high. So these are lower highs. And these are lower lows. Lower low, lower low, lower low. So, same as on the bearish trend as on the bullish trend, we get that break of structure in towards the downside with a candle close. We don't want to see a wick, we want to see a candle close. This will then become our protective high. Same thing here, break of structure, protective high, break of structure. Now, if we look at it on the daily time frame, we can see that we have that structure, right? So we have a high, we create a higher low. We get a higher high, we get a higher low. We get a higher high, we get a higher low, higher high, higher low. And now we are in that higher high, right? So this would be our higher high, higher high, higher high, and so forth, so forth. Okay, so what we want to do next, mark out our break of structure. So this is our swing high. We break structure in towards the downside, in towards the upside with this high, with this candle close. Same thing here, candle close, so break of structure. Same thing here, candle close, break of structure. Same thing here, candle close, break of structure. Now, what do you see that price does after creating higher highs or higher lows? We can see that price never retraces back towards that protective low that I explained to you, which occurs after we get a break of structure, right? We get all of these lows that are not visited again for price. So we don't see price doing this, right? We see price doing this, not coming back towards these towards these protective lows. Now, how will we implement this to our strategy? You can see that price always comes back to a certain zone. And what is that zone called? It is called supply or demand. Depends on if you're bullish or bearish. So if we mark out the daily time frame, we can see that this was the sell before the overall push up that broke market structure, that gave us the break of structure. We say a green candle or a white candle, and then we have 3 bearish candles. So these 3 bearish candles are my demand zone. If we drop down to the 4-hour, we can see that we have, in this overall move in towards the upside, we can see that we have bumps in the road. We have this bump, and that's it. So those lows will be fuel for the market to move back in towards the upside. So these are the 2 lows that need to be taken once price taps into our demand zone. We want to see that break of structure as well as our protected low that is being created. Now, this is our overall swing low, and this is our overall swing high. Or what are we going to do is we're going to get the fib retracement tool, grab the bottom go towards the top. And you can see that these liquidity lows are within discount. So price will need to come here, grab these two liquidity lows, tap into our demand zone, and then move towards the upside. And how are we going to get that move in towards the upside, or how are we going to predict it? What is fractal structure? It is basically the market moving within the overall swing high and swing low, creating its own little trends, right? If we remove this, you can see that price has these little we can see that price has these little moves in towards the upside, right? So this is our break of structure then in towards the overall swing high. And this would be our protected low. What can we see here? We had a move up, we have a move back down. So this is a move, right? We can see that price creates a break of structure on the individual candlesticks, and we can see that the low that is being created is never visited again. So you can see that we have a break of structure, we have a high, we have a low. This is that fractal low because we broke structure from this high. We can see that we create a new low, so a higher low. We can see that it never comes back towards this low. And this low creates market structure. It breaks our structure. But what do we see here? We can see that we are in a range right now. We can see that we do not have valid highs or lows within this move towards the upside. So these two stacked lows will be liquidity for the market when it wants to move higher. Not these lows, because that's in our overall demand zone. And we don't want to see price revisit that because that is really scary. How are we gonna then implement it into our strategy? Okay, so this is a trade that I announced last week on YouTube, Telegram, everything that I have. Why is this a valid setup for me to trade? Well, the market moves in two ways. The first one is the impulse. The second one is the pullback. So the green one is the impulse. The orange one is a pullback. Impulse, pullback, impulse, pullback, impulse, pullback, impulse, pullback, impulse. And now we are back in that pullback range. So we can see break of structure. We have a high, we have a low. This is that break of structure as well. This is a fractal break of structure as well. These two are fractal structures because in the overall move we have these little break of structures. And then this is our major break of structure. So you can see once price actually swept these two fractal lows, you can see the price instantly had a reaction. Why is that? Because we were in a daily demand zone right over here. We can see that price stepped into that demand zone, had a sweep of these two lows. If you drop down to the 4 hour, we're going to see that fractal shift in market structure. How are we going to read that? We see a high, a low, a high. We get a low, we get a high, we get a lower low, and here we create that higher high. We on the higher time frame for fractal structure, we don't need a body close. We need a wick, or we don't need it. It's just valid as well. Because if we if we combine it with basic structure in the market, we can say we had an engulfing candle, right? It closes below the high of this latest bearish candle as well as a fractal break of structure. So we know from this point onwards, the market was looking for buys. So we would have placed our stop loss well below this low to then target on the daily time frame a new overall high in towards the upside. Let's look at it on a different pair. Let's look at it on Euro NZD. What can we see? Break of structure. Break of structure. And a break of structure. So we know we are bullish. Second, what do? We get our 50% retracement tool and we get that and we get that low. We have a high, lower low, lower. So what do we know now? We have our low, a higher high, higher low, higher high, higher low, and then we create our new higher high with a body candle close. So we get the swing low, we drag it towards the swing high, and we can see that we do have a valid demand zone on the daily time frame. Why is this good? Because the demand zone is laying within are 50% extension rate. So basically it is, for the big buyers, it is a discount for them. So we know that buyers will be looking to buy here. What can we see? We have a liquidity low right over here, because in the overall leg towards the upside, right over here, you can see that we have this as a pattern. So this will be our liquidity low for the market to fuel higher. So what are we waiting for? We want to wait for price to sweep this low, give us a fractal structure shift, which happened. Let's look for it. Which happened. We can see that we create a high, a low, and here we break structure. So this could have been a valid entry for us. There are stops below this low, and then target a minimum of a 2R. There you go. I hope you enjoyed. Make sure to check out my other videos as well. They're doing fantastically. Thank you, by the way. Make sure to reach out to me through there, and I will help you further. Thanks for watching. See you in the next one. Peace.